Today, Binance is shutting down some Russian wallets even after it said it wouldn't. The US government also dials up the pressure on Russia with new crypto mining sanctions. But how effective has the crackdown on Russian crypto users been? We ask Ari Redbord of TRM Labs. Welcome to CNBC's Crypto World. I'm Tanea McKeel. Digital currencies traded higher throughout the morning. By noon Eastern, Bitcoin was worth more than $42,000, a two-week high. Ether traded around the $3,100 level, and Avalanche traded around $78. All right, on to the top stories. First, one of the world's biggest investment banks is looking to partner with crypto exchange FTX. According to the Financial Times, Goldman Sachs CEO David Solomon met with FTX CEO Sam Bankman-Fried last month. The pair discussed how Goldman could advise FTX in talks with U.S. regulators, and Solomon and SBF also talked about future funding rounds and the possibility of taking FTX public. The company was valued at $32 billion as of January of this year. From one crypto exchange to another, Binance is trimming its presence in Russia. The world's largest crypto exchange told Russian citizens and businesses with wallets holding more than $11,000 in crypto that they would be banned from trading. However, accounts with less than $11,000 would remain active. The move comes after Binance previously refused to freeze users' accounts in the wake of the invasion of Ukraine. Finally, the U.S. government is stepping up its own restrictions on crypto businesses working with Russia. The U.S. Treasury imposed new sanctions on mining company BitRiver. The company is based in Switzerland, but offers mining technology across Eastern Europe and Russia. The Treasury said that BitRiver helps Russia, quote, monetize its natural resources, while BitRiver said in a statement that the latest sanctions should be seen as an interference in the crypto mining industry. World leaders have been turning up the heat on crypto businesses and users in Russia since the invasion of Ukraine began nearly 2 months ago. How effective have those sanctions been, though? I spoke to Ari Redbord of TRM Labs to find out. First things first, we saw the sanctions from the U.S. Treasury against BitRiver yesterday. Why target a crypto mining company?
Yeah, no, really interesting sort of sanctions rollout yesterday from the U.S. Treasury Department, which really kind of continues this escalation in terms of sanctions on Russia in the wake of its invasion of Ukraine. So look, the purpose of sanctions is to essentially deter, to punish, and then also to change behavior. But there's sort of another piece as well, and that is to ensure that sanctioned individuals, sanctioned entities are not evading sanctions. So why, as you asked, sort of why BitRiver, why crypto mining? You know, look, essentially cryptocurrency mining is these giant warehouses or server farms where you are using energy to essentially run programs and servers, and those programs ultimately mine cryptocurrency, Bitcoin. So Russia is essentially utilizing its natural resources in order to create value, and that is really what these sanctions are intended to do: to stop Russia from using its energy resources to create value.
So crypto is just a slice, and within it, mining itself is just a small portion. Going beyond mining, do you see these sanctions effectively targeting the rest of the crypto industry in Russia?
Look, I think that Treasury and allies have been very careful to specifically go after sort of what I refer to as the illicit underbelly of the sort of overall crypto economy. We've seen them go after high-risk exchanges, really going back even pre-invasion of Ukraine. The U.S. Treasury Department designated or sanctioned 2 non-compliant high-risk exchanges that were Russia-based. One was called SUEX and one was called ChatX, and essentially those exchanges did not have compliance controls in place to stop ransomware, to stop sanctions evasion. And now, since the invasion of Ukraine, we've still seen Treasury continue that effort. So last week, they designated Hydra Market, which is essentially a Russia-based darknet market. We saw Treasury go after Garantex, which is another high-risk cryptocurrency exchange. Now, this designation of BitRiver is a little bit different because really what it is attempting to do is cut off Russia from accessing the tools that they need, the hardware, in order to mine Bitcoin. Because remember, the key to cryptocurrency is that it sort of lives and moves outside of the US or traditional financial systems. And this is sort of a continued barrage of sanctions to cut Russia off from the global financial system.
How effective has the crackdown been on individual Russian wallets or some of the legislation in the EU so far?
Yeah, no, look, we saw the EU, I want to say it was last week, come out and essentially ban EU cryptocurrency businesses from doing large transactions with Russian persons or Russian entities. And I believe that number was capped at about 10,000 euros. So really what the EU was attempting to do is say, hey, look, Russians writ large should not be doing high dollar value transactions with our exchanges. And the reason for that really is you've seen this laundry list of sanctioned individuals, Russian oligarchs, Putin's inner circle. But we have not seen any cryptocurrency addresses sanctioned with those individuals. So it is still hard for exchanges to tell, hey, is this a cryptocurrency address associated with a sanctioned individual? And this EU regulation attempts to solve that by essentially telling exchanges, look, you cannot transact or do large transactions with Russian individuals at all.
Final thing, there was a pretty widespread narrative that Russians would use crypto to skirt sanctions, or that Russia itself would use crypto to skirt sanctions. A lot of debate on either side of that, but how has that been going? Has that come to fruition?
Yeah, no, it's a great question. And, like there are a couple pieces to it. First, look, the entire crypto economy, it doesn't get close to really what it would take for Russia to evade sanctions at scale. And when I'm talking about Russia, I'm talking about the Putin or the Kremlin, and that it becomes very, very difficult. You're talking about hundreds of billions of dollars of blocked funds from the Russian central bank. You're talking about, taking out Russia's top 10 banks and cutting them off from correspondent banking. You're talking about the oil and gas sector. I mean, these are potentially trillions of dollars of blocked or sanctioned funds. So the answer to that is no. Russia cannot use cryptocurrency to run a G20 economy overnight. It just doesn't work that way. But what you will see inevitably is sort of this laundry list of sanctioned Russian oligarchs or individuals will attempt to use cryptocurrency in smaller ways to evade sanctions. They don't need to, fund a ever more expensive war or prop up a G20 economy. They just need to try to live the lifestyle to which they've become accustomed.
All right, that's all for today, but you can find that full interview over at cnbc.com/cryptoworld. We'll be back tomorrow, and we'll see you then.